Let's hope 2024 is better than 2023 for some of my very patient shareholders. Hang on. Oh, it's a firm press. No. It's done it? Okay. Okay, let's start. So PolarX, where are we? We're in the US. Our projects are in Alaska and Nevada. Our focus on North America came about for a number of reasons. One of them, low sovereign risk. I've worked a bit in Africa and South America in my time, and it's a good reason I moved north and found these projects in North America. We're also pursuing high-grade assets that have got obvious advantages. Our focus is on developing our copper and gold assets in Alaska and Nevada. We want to take these things down the production path line. And we've recently announced a scoping study update. My goal this year is really to narrow that large gap that exists between our asset value that we've created and our market cap. So we're sitting at about 20 million market cap, and our Alaska Range project sitting at a $625 million NPV. Oops, sorry. Press hard, but not too hard. Okay. Okay, so who are we? Our key management. The executive team is Mark Bojanjak, as Kerry mentioned. Mark was due to talk, but he had to stay in Perth for some important meetings, and I've had it thrust upon me to present, and a little rusty at the moment because I've been a bit of a technical boffin for the last few months, and I wasn't expecting to be thrust into the presentation, but bear with me. I've done about half an hour of practice. So. Yeah, thank you, Kerry. It's always good to have Kerry in your team. Okay, so for a junior of $20 million market cap, we've got a pretty impressive shareholder registry. Ruffer Gold stands there as our largest shareholder, and Ruffer's been supporting us for at least the last 8 years. They're a big fund out of London, and they do believe in our projects, and they've got the patience. As long as we're creating the value in the assets, they've got the patience that that's going to be realised at some point. Northern Star, who you're all well aware of, they came on board about 14 months ago. They're a neighbour of ours up in Alaska, and they're a strong supportive shareholder. They came on at 10% originally, and they increased their position last year in a capital raising in August. And with recent conversations with Northern Star, we think we're on the right track to maintain that support. We've also got US Global, which is a large fund out of Texas, and Lundin Mining sits there as well. Our top 20 and top 40 percentages show that we're still quite a tightly held company. A lot of that's been because we've turned to existing shareholders, particularly in dark moments, to do rights issues and so forth to maintain their positions. And I think that's effective for when the market finally does turn, which I think is coming this year. It should be a tight shareholder registry should help us maximise our returns. Okay, so I'll introduce you to the projects themselves, if you're not already aware of them. In terms of Alaska, we're about a 6-hour drive from Anchorage. You can either head up the highway towards Fairbanks and take a right-hand turn at Cantwell, or you can go via the Glenallen Highway and come in from Paxton. The Denali Highway, it's about 90 miles long. It's a bitumised road. Our projects straddle along that highway. And it's important to have close proximity to infrastructure in Alaska. Being a bit landlocked is a bit of a challenge for some. If you might be aware, Trilogy's got a 600-kilometre road that they're trying to get approved to build. No mean feat in an environment like Alaska. We've also got grade on our side. Our projects are actually quite high grade. Before I get into that, I'll just point out to Pogo, which is it's over the mountain range. It's about a 3.5 hour drive from us. That's owned and operated by Northern Star. It's a high grade underground gold mine. And it is nice to have the support of an Australian major that's also in Alaska helping us out with our exploration. Okay, focusing in on the Alaska Range project itself, I want to introduce you to Caribou Dome and Zackley. Now, Caribou Dome, it's a VMS deposit. It's 7.2 million tonnes. It's high grade, sitting there at 3.1%. It's got some silver in it as well. And Zackley, it's a skarn, so it's part of a bigger porphyry system. It's a metasomatized limestone that is mineralised from porphyry emplacement. That's sitting there at decent grades as well. It's 4 million tonnes, 1.1% copper, 1.6 grams per tonne of gold, and there's some silver in that one too. Okay, so some people are probably wondering, what have we been doing in the last 12 months? Before I get onto that, this slide just draws attention to the illustrious company that a high-grade copper deposit like Caribou Dome sits amongst. Okay, so I've been in the role of Managing Director for about 18 months now, and I've always been of the mindset that exploration really has to be focused on a mining outcome. And maybe that comes from my first foray into the industry where I was working at Plutonic Gold Mine. I think we kind of needed to recalibrate our direction, and one of the ways to do that was to engage in these scoping studies. And the benefit of scoping studies is it really helps you to identify where your key asset generators are, how to prioritise them, how to best spend your bucks. So we're on our third generation of scoping studies. The first one hurt a bit. It was priced at $9,000 US a tonne copper, and the price dropped. So when it went down to current prices, it was in the red. But what it did teach us was where to focus on. We had recently completed a drilling campaign at Caribou Dome, and so we knew exactly what kind of numbers you were looking at per tonne that were going to add to the bottom line. So the first priority was to redo that resource, and we did that, and it went from 2.8 million tonnes at 3.1% copper to 7.2 million tonnes at 3.1% copper. So it was this 2.6 times improvement. Now, doing a scoping study, that meant you went from basically in the red to 309 million Australian dollars NPV, and you had a 38.4% internal rate of return. At that point, we're like, well, what do we do? Do we drill more? Because obviously increasing the tonnage on an open system will add to the NPV. However, we took the view that with a 78% copper recovery, that was low, and we could do a lot more work there. So I hunted around, and I engaged Ausenco in Vancouver because they are copper flotation experts. And I'm glad I did that, because in 3 months they improved our flotation recovery by 10%. Now, what does that mean? If you put it back into the scoping study, there's no extra capital input, but the output's good. It improved our NPV to 625 million Australian dollars. The internal rate of return has jumped to almost 74%. We announced that about 2 weeks ago, and our share price has doubled. So we've gone from 0.6% to 1.2%. It's got a payback period of 1.6 years. Healthy operating margins. You can see the financials for yourself there. It's almost 25,000 tonnes per annum of copper output, in case you're wondering. Okay, so once again, scoping study says, what are your next steps? Well, it's both. It's improve the resources and continue the work on the metallurgy. We think we can get above 90%. There's a couple of different methods we're assessing now, not just conventional flotation. There is an alternative whereby you'd end up with an Electro 1 product, and you may then save further on the freight costs, but we don't know yet what the energy freight kind of trade-off will be. So we may just stick with conventional flotation. That's further work to be done. That's just showing some of the benchmarks we use, some prices and so forth. Okay, so going back to Caribou Dome, there's plenty of opportunity to increase the size of this. First of all, you'll notice that in the middle of the pit design there's a separation of the ore body. Now, there is a fault in there, but there's also drill holes that end in like 14% grade, and they haven't been followed up in between. And the reason is it's a bit difficult drilling because you've got a gully there. I'm a structural geologist. I'm keen to get in there and pay particular attention to that, because that zone itself, if I can take out that bullnose, it adds 1 million tonnes to the resource. Now, the resource itself is only going down from surface to 300 metres. We have holes that go down 450 metres that we couldn't add to the resource yet. But if I can add just 2 million tonnes to this resource, it adds nearly 200 million Australian dollars to the scoping study, to the NPV. So the system's open, it's steeply dipping. We've got geological support that to go deeper on that. So that's a high priority for us now, is to get the drilling permits and everyone engaged and start drilling that. Get it ready in May and start drilling in June. Hit it for 4 months. That's the window we've got. And the other one is Zackley as well. Now, Zackley is also an open system. There's easy tonnes to add at depth. I'll just go on to the next one. So Zackley itself, if you track this is a profile view. If you track where the red zones are there, that's the trend of the mineralisation going deeper. There's quite a bit of mineralisation along surface that I haven't yet knitted together properly with the structures, but there's good opportunity to prove up the structural continuity there and add to the resource there. So my target is really to try and get this thing to around 15 million tonnes before there's some sort of decision to mine. Okay, so in our view, further exploration success will be easily quantifiable to the market due to the scoping studies and the quantitative data we've already shared with the market. So it's all about narrowing that gap I spoke about in the opening. So in the market, timing is everything in this junior resource sector. And I think that the market is improving for copper. And I'm not alone there. Goldman Sachs has recently forecast US dollars, $10,000 a tonne for copper at some point this year. If they're wrong, if it's 9,000, 9,500, it still makes pretty good value for us to improve. So in the expected market conditions, we aim to close that gap between our asset value and our market cap. So, I don't expect that the market cap's going to go to 625 million, but, I might fail and the market cap gets to 150 million. But, from a $20 million market cap, I'll take that any day. Okay, so we'll go on to the next, our project in Nevada. Is it almost up? I always lose track of these things. I'll just let you know we haven't forgotten about Nevada. We're nestled in amongst an emerging gold trend, similar to Carlin trend. We've got active mines around our project. The most exciting development there was the IP survey I did late last season, which is around July. We've identified a very long anomaly that coincides with gold anomaly, and with our shareholders, major shareholders, they're very keen on us also attacking that late next year. We're looking at October after the Alaskan season. Sorry for going too long, Kerry. Thanks for your time, everyone.
They know what I'm like. Thanks, Jess.